Hi there, you're watching Markets Tomorrow on ET Now. I'm Ajay Sharma.
And I'm Tanveer Gill, and it's been an interesting day for the markets with a solid 150-point recovery coming in for the Nifty and over 500 points recovery coming in on the Sensex. We'll talk about the market session today, but first just get you a quick highlight of what's lined up on the show. Peter Elston, Head of Asia Pacific Strategy and Asset Allocation, Aberdeen Asset Management Asia, joins in with his views. Sajeev Dhawan, who's MD Capital Services, talks about his market outlook, and Ashwini Gujral takes us through the technicals for the market stepping into expiry day.
That's correct, but of course the market, it was all over the place. In fact, the pessimism at the start of the session was so high that we almost dipped to lowest levels in almost 13 months on the Nifty. But within almost an hour of trade, things started recovering, and we saw a whole lot of over 100-point pullback as far as the Nifty is concerned. Sharp pullback in the Bank Nifty as well, and we actually saw the turnover surge. Of course, it's the expiry of the August series tomorrow, so the turnover was bound to surge one day ahead of that. But there were a lot of factors which are playing in the markets, on the mind of the markets today. Rupee too made an all-time low, and at least in the first 30 minutes of trade was just falling off the cliff, which was actually spooking a lot of traders on the street. But despite the sharp pullback which you saw in the market, it was only select stock which actually triggered the short covering rally. So the large part of the rally was because of the wound up nature of the market towards the negative side. Some part of that started to get unwind in the first hour of trade, and hence we saw a sharp rally. The stocks which were responsible from the front to pull back the Nifty and the markets overall, some of them of course were TCS and Infosys led from the front. Reliance Industries also pulled back quite sharply. Tata Motors have been doing quite strongly in the past couple of sessions. Apart from that, ever since the Syria issue have actually taken center stage as far as the global asset classes are concerned, oil stocks were bound to trade under pressure, and we did see fair amount of pressure coming in on stocks like Oil India. The OMC pack was trading lower too, as well as GAIL and some of the other upstream companies. A reverse kind of a trade was seen in KN India. Yesterday it was up around 1%. Today too, at the highest point in time, it was up over 6.5%. There were also talk in the market that Ranbaxy may actually get an approval for about a $2 billion hypertension drug, and we saw a sharp action in Ranbaxy as well. There was some semblance of fund selling in select stocks, and Titan was one of them. At one point in time, it was down over 6%. United Spirits as well, past couple of days has been witnessing consistent selling, and today was one such day. Net, of course, a couple of issues which will be playing on the minds of the market tomorrow, especially after this sharp pullback, is where would the Nifty expiry happen. Most of the data points indicate anywhere between 5150 to 5300 is the kind of level traders are watching out for as far as the Nifty expiry is concerned. A lot of macro data also is lined up, and of course how the progress of the Syria issue pans out, because that is exactly what is impacting crude oil prices and of course the rupee.
Oh, absolutely. In fact, let's put that question to Ashwini, best position to answer it. The range, you think, Ashwini, near term is going to be between 5150 to 5300, and it's going to be a pretty volatile range?
See, the market needs to build a certain base before it can have a sustainable pullback. So chances are that around this 5100, 5350 zone will make some kind of a range, and then from that range we'll be able to move up. The problem is the crisis of confidence, and confidence does not get built up because of one day of pullback. It gets built when you say that the market is not falling below certain levels. So it's ripe for a pullback. One leg of decline to about 51, 52 is over, and from here, it's been a huge cycle of bad news. That cycle, chances are, will turn at some point, and we should say, maybe 56, 57 before the next phase of decline sets in, and which takes the market lower to 47, 4800.
Sajeev, come to you. What are you making of the pullback move that we saw in today's session, and whether or not it's sustainable? There is opinion building in the market that maybe 90% of this fall has pretty much been seen. You have perhaps another 10% to go.
Tanveer, I think I agree with what Ashwani said. You need a few days of stability. The confidence and sentiment levels are at all-time lows over the last, if you see what's happened over the last 6 months or so. Bad news doesn't stop. If things went bad enough locally, we've got the problem with Syria now, which has obviously created more problems, not just domestically, but that's unnerved global markets. To say that 90% of the fall is over, it's difficult to say. If the rupee continues to weaken, despite the RBI trying to stem the flow to some extent, you could see the markets bounce back, as Shwani said, but it's difficult to see how long traders are going to go aggressively long, or investors are going to feel more confident over the next few weeks, unless the government takes some stern action and some confidence-building measures. The timing of the food bill has come as another disappointment when there's concerns on the fiscal deficit. And ultimately, with the rupee the way it is, it's very difficult to see the markets or the rupee stabilizing over the next few days. It'll take at least a week or two to see the rupee stop, whether it's at 65 or whether it's at 70, but it has to stop and stop moving 2 to 3% a day. The same goes for the Nifty. Wild swings of 100, 200 points on the Nifty don't really help anyone. It's better if we just capitulate and settle at 4,800. At least that's the base. But as of now, the trend is clearly still on the downside, and any rally of a couple of hundred points will still be probably used as opportunities to sell into rather than go long. So unfortunately, the fundamental news is very weak. Investors, yes, they are buying, but there are just not enough of them out there at the moment, and there's plenty of short sellers and bears who've made very considerable profits over the last few months who are in the driving seat still.
Peter, what is your outlook as far as emerging markets are concerned? How worried are you at the current outset of overall emerging markets?
Well, as with many questions, there's always a few ways to answer them. In terms of our equity investment process, which I think you and your viewers will know, we are very long-term investors in India, and we're also bottom-up investors. So we're not sort of taking a view on what's going to happen to the market in any one period. We're just looking to find well-managed companies that are looking after shareholders, and when we find them, we're hoping to sort of stick with them for a very long time, and that hasn't changed. So from that perspective, we're not particularly worried. What India is doing at the moment in terms of its market or its currency, these are things that are not particularly unusual for an emerging market. Emerging markets are volatile, and if you don't like that fact, then you shouldn't be investing in emerging markets. Now, having said all that, we've always said that the politics in India is a bit of a mess, that politicians tend to sort of hold back companies in terms of progress, and what we're now seeing is growth rates in India sort of fall from their glory days, if you like, in the mid-2000s, of around, 9-10%, and we're now looking at growth rates of 4 to 5%. And at those sorts of levels, our companies start getting affected. Our companies' profit growth start getting affected. So in that sense, we are a little bit concerned about what future growth in India is going to be. We're pretty sure that the long-term picture is going to be pretty rosy, but the medium-term picture now is starting to look pretty soggy.
Right. Ashwini, how would you approach the two stocks which really stood out in trade today, Infosys and TCS? Right from the start of the day, they were strong and added at one point in time 100 rupees almost on TCS. Infosys, on the other hand, continues to see consistent buying. There are some management level changes also which have been announced. How do you compare the two?
Well, clearly they will benefit a lot through the rupee, and till they keep making fresh highs, it's a good idea to buy them. But given that they've had substantial rallies, buying them from a positional perspective or a swing perspective requires some sort of a correction. So chances are that correction will come once the market corrects on the upside. Chances are these stocks will correct down to their moving averages, and from there they can be bought. But clearly this is the only space where people can get long on this market.
Right. Peter, you have an overweight position on India. Do you want to change that position right now? Have you booked profits? What's the stance?
Well, we're thinking about increasing it. These periods of volatility are ones that are most of the time very hard to anticipate. But the key, I think, to investing is to make sure that you take advantage of these opportunities that the volatility presents, and that means finding the right time to start buying. Now, I don't know exactly when that time is. I'm pretty sure that our equity team hasn't actually yet started to increase weightings, but I know that our fund managers in the global team, our global equity team, they're getting interested not just in India but a few of these other emerging markets that have shown sharp decline. So the answer is yes, we are thinking about changing, and we're thinking about increasing it.
Sajeev, how are you looking at the entire oil pack, because that was in particular pressure today? Almost at one point in time 10% down was what ONGC was trading at. The oil marketing pack was also down. Of course, we all know the concerns of Syria having a big cloud over the overall commodity complex. How would you approach this particular space? Because even the buzz of a diesel price hike is getting louder.
See, Ajay, these are good companies, but they've got the problem which they've always had of the government subsidy problem, and unless they hike diesel prices by at least 5 rupees, possibly even more, which will send out a very positive signal as well, which I think FIs and generally investors need from the markets. These companies are going to continue to bleed, and you've seen stocks like Indian Oil, BPCL, etc. They've been sinking, and they're still off their 52-week lows, but the way they are moving, they can slip further lower, and despite the valuations or the fundamental reason to buy, you wouldn't see many people stepping in at the moment. If diesel prices are hiked, then you'll see some respite and the stocks will have a little bounce back. But otherwise, ONGC, another great company, had its run up to around 330 a few months ago. That's slipping, and slipping very sharply as well. So it's not a great sector. If you want to be in the oil and gas space, then you'll have to probably still look at the private companies, which means Reliance for safer money, and maybe SRO for investors who've got a high risk appetite to that particular sector. But oil marketing companies are currently just not safe enough because of the government inaction on pricing.
Peter, come to you. Any safe haven stocks that you're looking at right now? You have a fair amount of interest in IT, which is held out in the market.
Oh, crikey, I'm not even... I don't think they ever had safe haven status. I mean, perhaps relative to the state-owned banks, they would be considered relatively safe in some respects. But look, no bank is a safe haven. Banks are sort of fundamentally bankrupt institutions because of this mismatch between sort of lending long and borrowing short. I mean, the entire sort of thesis for a bank relies on confidence, and if that confidence is broken, then banks can get into a lot of trouble. But look, all banks are subject to this monetary policy cycle. All banks are subject to this bad debt cycle that you'll get in any country. We're not trying to, finesse things. We're not trying to play that bad debt cycle. We accept the fact that our banks sometimes are going to have their margins squeezed either by what's happening on the monetary policy front or by what's happening on the provisioning front. What we care about is, the bank's lending policy. Are the banks making sure that they're lending to people or companies who are going to pay them back? and as long as we can retain our confidence in that, then we can retain our confidence in these banks on a long-term basis.
Ashwini, talking of safe haven stocks, ITC was one stock which saw very interesting buying at lower levels, and at one point in time almost 22 rupees pullback intraday. How does that one look on dips, on declines such as we saw in the first hour of trade today?
We're talking about ITC?
That's correct.
Well, the only good thing about it is probably it won't decline like a bank or an infra company. But overall, even ITC is now below its 200-day moving average. From 380, it's down to 290. Maybe longer-term players can top up their holdings. But, given that FMCG also moved up like, they were growth stocks, chances are that they will move down like a growth stock as well. And 270, 280 has strong support. So maybe slowly you can start buying here.
Gargi Parikh joins in now for a quick perspective on what to watch out for, the stocks actually to watch out for in tomorrow's session. Gargi.
Well, Tanveer, Kane as well as the Titan could be some stocks in focus for tomorrow too. Remember that Kane has seen a stellar run-up. In fact, today it was up almost 5.5%. Pull up the 5-day chart, we'll see a regular increase in Kane. There are two reasons. One, that crude oil prices have been running up. That's a major positive. Fund buying that is coming into Kane. Despite the sell-off that we are seeing in the overall markets, there has been buying in Kane. 7% increase in the last 7 days itself. Also remember the entire gamut of Vedanta stocks have been going up. A Sesa a Sterlite, which is now has been suspended and merged into Sesa Kane India as well as a Hindustan Zinc. All of them have seen a run-up. Remember that both Hindustan Zinc and Kane will be subsidiaries of Sterlite, the new entity from now on. And, all of the run-up that we've seen mostly on these two factors of the merger as well as on prices of crude running up. The second one being Titan, that could be under pressure going forward. Today again, at the start of the trading session it was holding up just about a % decrease or so. But look at the fall that we saw just in the last half an hour. Despite the market recovering, 4.5% decrease that we saw on Titan today. Two factors that one can point out. Firstly, with gold prices rising and the rupee depreciating, the demand for gold, jewelry especially, is going to be very low. And the second one being procurement of gold. This is going to be a big concern. And in this quarter, September quarter itself, it is going to impact the earnings of these companies. The imports, like we know in July, had fallen, to drastic levels, and probably because of the curbs that the RBI had, put for gold imports, that's going to impact the procurement of gold, and imports have already fallen. All of that is not going to augur well. So two negatives coming in for Titan, and further, decrease that we can expect in the stock going forward.
Thanks for that, Gargi. Ashwini, what are your top bets in today's market and the way markets are panning out? I see Kane also as one of your top picks.
Yeah, Kane is a buy with a stop of 322, target of 345. TCS is a buy with a stop of 1880, target of 1940, and BPCL is a sell with a stop of 278, target of 255.
Peter, are you happy owning stocks in the current environment, and which would those be?
Well, we're always looking for new names, so that's nothing new. The current volatility doesn't make us sort of look for new names any more than would be the case at any other time. But the fact is that it's very hard to replace something that's already in our portfolio, because what's in our portfolio are things that we have done an incredible amount of homework on. We've met the management of these companies countless times. We've done a whole load of checks and balances to reassure ourselves that these guys are trustworthy. They're going to look after us. They're going to care about every penny they spend or every rupee they spend on the business, and they're going to make sure that the revenue flows through to the shareholder. So it's a slightly long-winded way of answering your question, but at the end of the day, it's quite hard to displace existing positions.
Rajiv, surely you have a view that one should approach markets only when it stabilizes, but what are the top stocks you have on your mind which you would start nibbling into once the market goes a little lower or forms a base around whatever level?
Well, Ajay, we've started buying into LIC housing at around 160 levels. Mahindra has come to around 750. We feel that's a good price for investors to buy into that stock. And maybe if you're a bit more aggressive at the banking pack, which has fallen off, IndusInd and Yes Bank, they are high-risk banking stocks at the moment. They can quite easily fall off another 5 to 10% plus. But we feel that over the next couple of weeks you will see some stability return. The selling in the banking stocks, I feel, has been a bit overdone, and the private sector banks will lead the bounce back. It might take a few months more for them to give you outstanding market performance or above market performance returns. But I think very, very selectively you stick to these sort of stocks and counters. Tech and pharma, everyone already knows, so you'll probably be already long on those stocks anyway from a trading perspective.
All right, gentlemen, we leave it at that. Thanks very much for joining us and giving us your perspective.